All right, guys, we're gonna be talking about what is going on with the stock market, or what do we see? What are we looking at in the charts? And when we say the stock market, we're mostly talking about NASDAQ and S&P 500 to encompass the market as a whole, because as you know, tech stocks will move based off the NASDAQ, S&P, all that stuff. So, today's date, I think is August 10th, I think is what we're on. So this past Monday, we saw a sell-off, a big sell-off, and we had seen a couple drops in the Nasdaq and S&P before that, a couple weeks ago. And then after the sell-off, we saw a huge rally. So kind of showing, like kind of confusing as to maybe, what's happening. So I just wanted to bring up this topic, Kirby, just to talk about the market in general, not necessarily those days. But what do we see going on in the market? Is the market now recovering, or are we seeing, or is the market going to be booming from here, or are we going to see some downturn action?
Well, all those are good questions. All those are good questions, and I'm pulling up my chart right now to give a more accurate view of it. But for me and for the people that's watching, Alex, I know you already know, but for the people that's already watching, I love a down market. I love a down market because the only thing I see is opportunity. But like you said, since July 16th, that's when we hit the all-time high on the SP 500, and it's been choppy back and filling. I mean, so it was already going down before we had the the sham rule recession indicator pop off. It was already going down uh before Warren Buffett and Berkshire Hathaway announced that they cut their position in Apple in half. It was going down. It exasperated more down when the pairs trade with the Japanese yen happened. But we was already in a small downturn kind of movement before that. And for me, I just think the market is exhausted. And understand it's about 11 to 15% of the people in the market control the market. Everybody else is just playing in the game. They just along for the ride. Because there's no amount of money that me, you, or the viewer can put in a stock that's going to manipulate it and move it. Uh, maybe you can get like Hello Kitty and come up with a couple million and get a small float stock, and then you can manipulate it, especially with a whole bunch of social media influence going with it. You probably can do something like that, but it better be a small float. It better be less than 50 million share. I mean, 50 million shares. Hell, you want to probably go lower than that and say 100 million shares, something of that nature.
He's talking about roaring
But looking
kitty,
at
guys.
what I say?
You said Hello Kitty.
I said Hello Kitty. Oh, I'm sorry.
People are,
Hello
people
Kitty.
are gonna
Don't
be
hit me
looking
with a
up Hello Kitty
trademark.
stock right now and be like,
Yeah,
who's
yeah, yeah. Roaring Kitty. Please, Hello Kitty. Don't hit me with no trademark infringements. I meant Roaring Kitty. Roaring Kitty. That's what I meant. But yeah, so it was already since July 15th, we've already been having some backfilling. We got some exasperated movement for the things that I talked about already about those events that happen. Then you throw in some more Ukraine, Russia, you got some more Israel conflicts, popping off or have the potential to pop off with other countries like Iran. So those things are on the outlook. For me, and I wanted to tell a story. So I'm at an airport in Houston. That's on that Friday. So this is what, 2 weeks ago? 2 weeks ago, I'm at the airport in Houston, and then some people reached out to me, and then they said that, "Hey man, what are we supposed to do?" And these are just army buddies or whatever. And I don't really talk to them much about investing, but I guess they got 401ks or whatever that they invest in. And they was like, "Hey man, what are we supposed to do if this thing's turning down?" I said, jump head first in now, and then on Monday be ready to jump ass in second. And then one guy actually did it. He put a lot of money, a lot of money in on that Friday. And then it got down. Then it got down on the Monday, and it closed on the low. And then he, fully funded his, retirement fund and things like that. When bravo for him, and like you said, we got the rally coming into this week. And then but I also told him prepare for it to go down further. Always prepare for it to go down further. But in the big scheme of things, these days here, this last month or last 2 or 3 weeks, on the big scheme of things, this won't even be a blimp on the radar. But I'm always of the mindset of buying when the market's down. When the market's going up, like we've had since uh, December or October of 2022. Yeah, December of 2022. We've been going to the upper right of the charts ever since then. So when I got past the threshold of like 4,800 on the SP 500, that's when I was like, okay, I start paring down the amount that I was investing. I didn't sell anything. I just pared down the amount that I'm investing. The market kept going higher. And what I started doing, I just started making sure I'm showing up finances, I'm showing up things, getting getting the access stuff off of there, showing up the books. And then now we hit the all-time high, and it's because I'm shoring up stuff, and then now most of my money is just sitting here stockpiling, waiting. I've been waiting for the downturn to come. The market is not going to go straight up to the moon. It will be pullbacks, and I want to take the advantage of the pullbacks. So in the market in general, I see we're down about roughly 5%, 5 to 6% from the all-time highs now. Even with the big come down that we had this week on Monday, we got to 8%. We got to 8% down. A correction is 10%. I do expect for us to meet that 10% threshold on the SPY or S&P 500. I do expect to hit that threshold, and I mean close at a 10% down. Will it come sooner, later? I don't know, but I do expect it to come within the cycle, preferably before the election. That's my deal, and not because I just want the market to crash because I think the economy's screwed. I wanted to come down so I can just buy shares at a cheaper price. But that's where I think it's going. But I'm still invested, so if I'm wrong, I'm still in the game. I'm not a market timer saying I'm going in, I'm going out, I'm going in, I'm going out. It just I buy, hold, it come down, I buy more. If it goes up, great. That's just the avenue that I go about the stock market.
Yeah, it's been interesting seeing what's been playing out in the stock market, especially because we've had such a long rally, like you said, since 2022. And it did seem like it was just like nonstop, just going up, up, up. So I think it is important to like, just mention like corrections too or pullbacks in the market. It's healthy. It doesn't indicate that, America is collapsing or nothing. It's what has to happen in the stock market, in any market, in order to readjust. Um, if a market just continues to go up, that's kind of scary, like with no stop. And so, I mean, we also saw this with like individual stocks. Like I know like Nvidia was one that just kept pumping. I mean, I know someone that bought like one share and it doubled within a matter of like 2 months. Just insane. And so we're seeing pullbacks like this, but there's opportunities in these pullbacks. If you've been wanting to get in stocks and you feel like you've missed out because it just kept going up, now is the time to buy. And like you said, don't try to time it. You can't time, not even Wall Street knows what the exact price of a bottom is going to look like. So if a price looks fair to you, just start building a position. We always talk about, if you're unsure if the market's going to keep dropping, but you want to get in because the price is attractive to you, start building a position. You don't have to go 100% of your money into it, but put maybe 30% or 25% of your money into it. And then if it keeps dropping, you still have capital to keep putting money into it, and you can lower your cost basis and average down as it drops. But if it goes up, you've at least got a quarter of your money into it or a third of your money into it, and you make profit off of that. And then you still got the cash on the sidelines to do whatever with. So there's strategies and ways to take advantage of the market in either direction that it goes.
Right, and even when the market's going up, you're still going to have individual stocks that show a lot of pain, but overall, they're great. They're great companies. Will you feel pain in the immediate term? Just bring up some that's just had a bad time, even though we're at close to all-time highs. You can bring up the Nikes of the world. Nikes of the world, I believe, when times was good for the stock, when times were good for the stock, Nike was at 123, and this is back, December December of 2022. The high was 123. Now Nike's sitting here at $74 a share. Like, if you're a believer in Nike, Nike's still Nike. It still has a global recognition. It wasn't a sponsor of the Olympics this year, but you still seen they're branding a lot over the course of the Olympics. So Nike is still Nike. They're still producing athletes. They are still the shoe of choice for the most part. Uh, but a company like that, they had earnings that disappointed. So it'll be bad times for them. But like you said, start in a position. That don't mean you got to go all Rambo. I was down here at 74, and you go put 100% of your money in. Build the position. Buy a little. You know how much total you want to allocate towards a stock. So you buy a little now. And my preference is I want to buy a little, and I'm hoping it goes down so I can get more shares at the, same allotment, but at a lower price. And then once you fully have your money allocated to that position, then you just got to sit and wait. Don't sit there and stare at the market all day. I do it because I'm used to the swings, and then I got, a lot of people calling me about it. But don't sit there. It'll drive you crazy seeing your money go up and down. If you did the research, you did the homework, you understand the company, go ahead. Now, I'm not an advocate of people that's just starting in the stock market to go individual stocks. I say go pick you up a index fund, mutual fund, so the price will only move one time that day. I mean, you can still track it with the S&P 500, but that's really my preference for people that don't understand the stock market. Don't go Rambo. Don't go listen to these people on social media saying, "Oh, you got to buy the stock; it's going to the moon." Don't do it. You don't want to get rich quick. You just want to get rich for sure. So build a position. You want to be diversified if that's your thing. Just index mutual fund, index to the S&P 500, index to the NASDAQ if that's your thing. You have more risk tolerance and you like a little, you're more science and technology versed. Then you go there and then you just keep putting the money in there over time. Just keep putting the money in there. You'll wake up and then you'll have more money than you ever thought you'll have. And then that's how wealth is built. Anybody that's trying to get wealthy don't think they're gonna get wealthy in one day, 1 month, 1 year, 1 decade. They know it's a journey, but they know the end results will be they will have wealth. But when you go out here trying to play individual stocks like it's the lottery system and trying to trade in and out of stocks and things like that, you will be broke. You was better off just going to the casino and putting it all on blackjack, putting it all on black and roulette wheel or something like that. But Alex, you got anything else?
And we'll close it there. With all that being said, guys, if you have any questions or comments, let us know. We'll try to answer it the best we can. Don't forget to like this video, subscribe, share this video, and we'll see you guys in the next one.